Good morning and thanks so much for joining in. You're watching Ask Profit on NDTV Profit. My name is Mathew and with me is Smriti Chaudhary, and we'll take you through the next half an hour or so of trade. Let's take a look at where the markets are right now, and you're seeing selling intensify. In fact, the benchmark index is down about 0.75%, and you're seeing sharper cuts in the broader end of the spectrum, with the mid-cap index down now over 1.5%, and similar for the small-cap index. Small-cap 250 also losing about 1.5%. Now, to talk about some of the reasons why this is happening, in fact, you will get a bit of a picture from the sectoral distribution right now. And in fact, most sectors are in the red. The only outperformer in trade today is the FMCG index, and it's standing tall with gains of about 2.2%. A couple of those stocks are what we're going to focus on at the start today, but everything else from the likes of realty as well as metal and PSU Bank all losing ground. Take a look at the contributors list for the Nifty 50 as well, and you'll see a couple of very large, very heavy stocks that are pulling the benchmark lower. Right on top of the list, you have Reliance Industries as well as HDFC Bank. It'll be interesting to get a check on the technicals for Reliance Industries because it's been losing for 4 sessions on the trot, and it's down about 4% for the month so far. But let's focus in on a couple of stocks, as I mentioned, from the FMCG pack, and that's Marico as well as Godrej Consumer. Both of them posted their results yesterday, and both of them are bucking the trend today. Marico up 9.5%, Godrej Consumer up 5%. It's all on the back of earnings, and the picture seems to be changing. Harsh is joining in to tell you about why that is. Harsh, signs of green shoots, can you call it that?
Well, absolutely, Alex. In fact, the commentary from Marico was quite positive when it comes to the FY25 guidances. Double-digit growth on revenue is what they're expecting to clock. They're also expecting to see quite an improvement when it comes to rural, and that's going to probably hold the key. Rural, they believe, is going to help with that revenue number H2 FY25 onwards. And we all well know that premiumization is playing out fairly well. The urban space is doing very, very well where FMCG is concerned. It's the rural where the pain is. So Marico giving out that commentary, definitely a very, very big positive. And the double-digit growth for the foreseeable future, that confidence does give a bit of a fillip as well in terms of how analysts are viewing the sector, as well as how the investor community is viewing the sector. So even analyst estimates have been revised upwards. You had someone like a Nuvama come out 3.5% increase to their EPS estimates for FY25 immediately, and that is one positive. Of course, the green shoots yet to materialize, we're yet to see that uptick happen. Also very similar for GCPL, excluding some of the one-offs that they had. They recognize some goodwill, intangible assets which they had on their books from the Africa.
इंडिया तो आगे बढ़ ही रहा है और आगे बढ़ता भी रहेगा. Thank you.
All right. Thanks so much, Harsh, for getting us those details. In fact, we've got Lancelot Dicuna, who's the CIO of ValueX, joining in, and Swati Hotkar, Senior Equity Technical Analyst and research of Nirmal Bank. Thank you so much to the both of you for taking the time. Lancelot, we spoke about some of the aspects of GCPL as well as Marico. What do you make of the results? Because it all seems to be positivity surrounding the commentary by the management.
Yeah, I think, Alex, there were a lot of, positives from their, call that the management had, and they outlined, their growth plans for the next 2 years, which 2 to 3 years, which looks very positive. So they're looking to double the revenues by FY27, and they're introducing new products. There is the improvement in the EBITDA margin is expected to sustain. And they are expecting, or even everyone else is expecting, that this year's monsoon should be relatively, stable. And that, given that you have a good monsoon, rural demand always does far better. So, given that background, I think, yes, Marico has been, it is positive for Marico. And if you look at probably the stock performance over the last, 12 months, it had been flat to medium for quite a long time. And now we are beginning to see that uptick because of the re-rating that will happen in the stock as well.
Right. All right. It's time now, Lancelot as well as Swati, to jump into the queries. But at the start, I'm quite curious, Swati, what you're making of the move in the benchmark index. It's down, and at the low point of the day, a couple of those heavyweights, Reliance Industries, I think, proving to be a bit of a drag. So initial thoughts on the benchmark and some of those heavyweights, and then we'll move into the queries.
Yes, Alex. As of now, we are witnessing a fall of almost come nearby to the 1% on the Nifty. Today, Nifty has given the breakdown of the 50 days moving average also, which was coming at around 22,000 psychological mark. Now, 22,200 levels up to that levels. I believe if the 22,200 gets a breakdown, then more selling pressure is likely to intensify, or the profit booking can be witnessed, which might take a stock in Nifty towards 22,000, 21,800 at the levels I'm looking forward in the near terms. Bank Nifty had started showing steps of the corrections, and I believe the 48,000 will act as a crucial support level. If it's break that level, then selling pressure also will get increased and will take down the Bank Nifty towards at least 47,400 to 47,200. So the overall setup is, as of now, turning into the cautious signs. The technical parameters, the counters of both the Nifty and the Bank Nifty are trading below the mentioned support levels. So view is a little bit cautious on the indices. Stock specific, as you mentioned, that Reliance is currently witnessing a selling pressure from the last 3 trading sessions. And I believe that this selling pressure is likely to be intensified because the stock has given the breakdown of the previous swing slow, which was coming nearby its 20-30 levels. And on continuously basis from the last 3 trading sessions, the volumes are increasing whenever the stocks comes down. So which gives a little bit cautious sign on the technical front on the Reliance counter. I'm likely to witness a 2,700 levels can be seen very soon on the Reliance. So try to book your profits on every rise, whether it's on a Nifty, Bank Nifty or any counter as such.
All right. Good morning to you, Lancelot and Swati, and the viewers. And it's time to start with the queries now. Now, of course, reminding you again that you can write to us on the WhatsApp number that's on your screen or through any of our social media channels or through the YouTube live chat. Now, the first question is from Mahesh from Chennai. They're talking about the counter Usha Martin that they bought at a price of 373. It's slightly above where it's currently trading at. It's around 355 currently. Now, Swati, they're asking for key levels they should watch out in this particular stock.
See, the Usha Martin as of now trading nearby its all-time high, or say the 52-week high, which was at around 394 levels. And they have taken a long positions at very higher levels. As of now, the stock is planning to witnessing a very good support of 20 days moving average, which comes to at around 356, 357 level, currently trading nearby the same level itself. But looking towards the RSI, such as the Momentum Strength Index, it's showing a negative crossovers nearby the overbought zone. So we are likely to witness some sort of a profit booking, and we might see a downfall towards at least 330 to 320 levels. If the client is interested to hold for the longer or as a longer term access, then only he can hold on, or else maintain the strict stop loss of a 350 and carry a long positions. Positive momentum can be seen only if stocks manages to give the breakout of a 380. Above that levels, yes, new high can be seen up to 420 to 440 levels.
All right, the next question is from Shashank, and it's about KMC Specialty Hospitals. I'm going to take a chance, Lancelot, and ask you if you have coverage. He's bought at levels of 69.6, and it's currently trading at just about 87 or thereabouts. If not a specific view on this, could you talk about the sector that it's playing in?
Yeah, so I don't have a specific view on this because I've not really studied this company. But if you look at the hospital sector, generally, we find that hospitals and healthcare have been improving, across over the last 12 to 18 months. And you are seeing the tendency of hospitals to consolidate. We've seen a recent acquisition by, Manipal Hospitals, a large acquisition. We've seen a couple of other large groups also consolidating. So we are seeing that profitability is going to improve because as more and more specialization comes in, as insurance penetration goes deeper, you will see, hospitals really benefit from the higher pricing that they will get from insurance customers as well. So I think it's a good sector to accumulate, and build positions, but one has to be a little careful about valuations. and pick up stocks, when in this sectors when they are at lower valuations.
All right. Now, we've already discussed FMCG as a space, but we have a question from John from Chennai, and they're specifically asking about the counter HUL. Now, this is the biggest, this is the big gainer on the Nifty 50 today. In fact, the first 4 stocks itself are all FMCG stocks. But talking about this particular counter HUL, Lancelot, we're seeing a good traction in FMCG as a pack. Do you see that this may, of course, there's this rural commentary, the commentary that rural demand is going to go up from here. But do you see that there may be some sort of a comfort and valuation on FMCG counters like an HUL, and maybe now the risk reward is kind of changing for these counters, and maybe you should continue buying at these levels? Would you suggest that?
Yes, Smriti, I think that is possibly a better strategy, going forward, because while HUF reported relatively soft numbers, and the outlook also was a bit muted, they expected rural demand to improve, but probably after 6 months. The company also is actually moving into the premiumization segment. They're getting rid of certain products and they are focusing on what they call the power brands. So I think you will begin to see the impact of these restructuring of the company's business actually show up in profitability maybe 1 or 2 quarters from now. And if you look at it where it is trading, valuations have been pretty reasonable. It's probably trading very close to its 52-week lows. So given that the management has, they have been astute in their strategies in the past, and since they have outlined that where they're going to change and how they're going to modify it, I think given them, this is a good time to accumulate, because once the change is reflected in the financials, then the stock will get re-rated upwards again.
All right. The next question is on Fortis, and incidentally, we just talked about hospitals. We've got Mohit from Ludhiana who's asking about this specifically. Lancelot, what would you say about Fortis, which has been bought at levels of 270 from the perspective of the next couple of years? Stock is currently trading at over 450.
So I think Fortis is doing well, and they had a bit of controversy earlier, but now that seems to be behind them. And we should see that, this as the industry continues to grow, they have hospitals in most of the major metros, which is seeing good traction. So one should stay invested for the long term, especially if you're looking at the next 1 or 2 years. One can look at it. And in terms of valuation, even though it has moved up from the cost of, it's really not that overvalued to consider, exiting at this point in time.
All right. It's time for a short break. Lancelot and Swati, we'll come back in just a bit and we'll take more questions. Stay tuned.
Welcome back. You're watching Ask Profit. The next question that we're taking is coming from Rakesh, and he's asking about GSW Energy, whether it can be bought at the current market price for the short term. Swati, what's the view on the charts?
Alex, my view is a little bit cautious, and the stock has given the negative crossover from the oversold zone. So I believe that we are likely to witness some sell-off or more sell-off in the coming few trading sessions, which might take a counter towards 570 to 560. So if we are getting any swing high towards at least 600 levels, one should exit the long positions.
All right. The next counter we're talking about is NTPC. This one's from Anush Patel, and they've written to us on YouTube. They've already bought the stock at a price of 365 a piece. It's currently trading below that. Mr. Dukuna, I'm going to come to you on this one. We've seen a bit of a correction in the stock. Would you suggest accumulating at this juncture?
So I think it's better to wait for a little bit more correction, and then you can actually see that the stock had run up a lot earlier. But NTPC, while it is primarily a thermal coal power, power generating company, they have also been looking at adding renewables to their portfolio, and that would actually help them, moderate their portfolio. Plus, you will see, power consumption and power generation improve over the next years, and that would be beneficial for the company. So I think the long-term business outlook is very solid. But, having seen that the stock has run up, valuations look a little bit stretched. So if there is some serious correction, then one can look at definitely averaging it out, because long-term the outlook is good.
Mr. Tikuna, we have another question from Nancy. Now, this is, they're not talking about a particular stock, but power stocks in general. It seems like they already have some stocks in their portfolio. But now the question is that because of the volatility that we're seeing in these stocks, should you take a fresh entry or should you average? Does this advice go for stocks across the power sector, or maybe you're still constructive on some stocks that may be bought at this juncture within the power space?
So I think a lot of the stocks across the sector have actually gone up significantly. So whether it is Tata Power, JSW Energy, then you have the renewable power companies. So all these stocks have actually gone up significantly, and they became really expensive. While the longer term outlook is good because everyone's shifting into renewable energy, which is more sustainable and is also going to give profits over a period of time, the valuations that are there actually are discounting, maybe 3 to 4 years earnings upfront. So I think that we need to see some amount of correction playing in, and then we could, begin to see when valuations becoming reasonable and then accumulation. So I think one has to wait for most of the stocks in this sector.
Okay, here's an interesting query that it's coming in from Sagar, and he is talking about Piccadilly Agro, and we can pull up the chart and we can see where the stock is currently trading. It's at 795. But this is a stock that he began accumulating in 2019, I believe, and he has bought it, or rather he's started buying from 9.75 levels, and he points out that this is one of his biggest multi-bagger stocks in the Indian market. He says the stock has left planet Earth and now gone to another galaxy. That's a nice way of putting it. Lancelot, what would you have to say about this particular investment? Because it's, if you've got one good pick, if you've bought a stock for 9.75, and it's now 750, what do you need to do?
So I think one has to also look at, from a portfolio perspective, look at what percentage it forms of your portfolio, and then decide whether you should look at booking profits and cashing out, because this kind of growth is very rarely sustainable over a long period of time. So one has to be really cautious in terms of continuing to hold on to this, and maybe look at pruning positions as the prices move up further, because the momentum seems to be very strong. But as prices move up, one should really look at cashing out and holding on to the cash separately.
But any specific view on Piccadilly?
So I think the stock has really become expensive over the last 12 months has gone. While there may be reasonably good growth prospects in the business outlook has improved, profitability has improved. But it's very difficult to justify such a high valuation. And if you do purchase it at these levels, it's very, very unlikely, or it will take a very long time for you to get a good return on your investment at this point in time.
Okay. The next counter we're talking about is Gujarat State Fertilizers and Chemicals. Swati, this one's for you. The question is from Yogesh Jain, and they want to know if this is a good time to accumulate the counter. It seems like it's been in a bit of a downtrend in the last couple of sessions, even a month or so, I think. Would you suggest accumulating?
I will suggest to hold on at the current level, not to accumulate the position at the current market price. But if we're getting any dips between 200 to 190 level, that will act as a very strong support levels. And that will be a good levels if we compare the risk reward ratio. Because in the past, we have seen that the stock has formed the multiple supports nearby 185 level. So that level is acting as a very crucial support level. So I will suggest to not buy at the current market price. But if we are getting any dips towards 200 to 190 levels, definitely one can go for an add-on position.
Got it. The next question is from Hasibul, and he's asking about Tata Power from the perspective of the next 18 months. I believe we already got a fundamental view on the power space, so I'm going to go across to you again, Swati. On the charts, at 435, does it make sense to buy for the next 18 months?
See, Tata Power, Alex, we have seen a very good rally in 2024. Within a span of a very short period of time, stock has given a very good returns. But at the current level, the stock is trading nearby its overbought zone. So we, after witnessing such kind of a rally, definitely we are likely to witness some sort of profit booking. And when the market is started showing a correction sign, definitely this counter will also come down, and we'll see the correction for a short-term periods. I will not suggest to take a long position at the current market price, but definitely if you're getting any dip towards between 400 to 380 levels, that levels are very attractive to take a long positions. So just stay away from at the current level, but just wait for a dips towards to 400 to 380 levels.
All right. The next counter we're talking about is KEI Industries. This one's from Kanak from Gurgaon. They want a view for more than 1 year. Now, Lancelot, do you have a coverage on this counter, and what's the long-term view?
So I think long-term view is very positive, because there is, they've been winning new orders quite successfully, and we've been able to see that these, profitability as well as margins are improving in this company. So the long-term view is good for this stock, and one can remain invested and hold on to it.
Lancelot, just to point out, they say that they bought the stock at a price of 325 rupees. It's currently trading above 3,800 levels.
So, it depends when you bought it as well, right? So, there are many stocks which have traded, and if you continue to see there is growth in the business and profitability, if the business is growing at, let's say, 15% and the profits are growing at 15-20% a year, then one should continue to remain invested in the company, because profit growth is finally what will drive valuations further. So given that they have received, significant orders, order book is good, you should see some growth. But also it depends on your, holding in a single company. If the holding is not large, or is it very large, then one needs to look at diversifying and, moving out of the stock a little bit.
I think some of our viewers are seasoned in the stock market and have, as evidenced today, been able to pick up stocks at very, very attractive valuations. And so I'm so glad that we have such a diverse set of individuals that are experienced and also new to the stock market. But we're completely out of time, unfortunately, on today's program. Lancelot, as well as Swati, thanks so much for joining in and for giving your views and your answers to all the questions that were asked today. And viewers, it's always a pleasure having this conversation and bringing answers to you so that you can make your stock decisions, or buying of stocks or selling of stock decisions with more confidence. Do stay tuned, lots more coming up over the course of the day, and this is NDTV Profit.
and welcome. This is Hot Money. I am Agam Vakil, and in this show we take you through all the stocks which are buzzing in trade. Of course, at the moment, very quickly taking a look at the markets where we have seen weakness seeping in, and the Nifty is off 230 odd points away from the day's high. And in fact, it's down around 0.8%, so a lot of weakness coming in. And let's take a look at where this weakness is seeping in from, to take a look at all the constituents of the Nifty and see how things are faring. So a significant amount of chunk and, well, weakness coming in on account of Reliance Industries, ICICI Bank and HDFC Bank. Well, those three companies taken together contributing to as much as nearly 70 to 80 odd points in terms of declines. And then, of course, you also have Axis Bank add to that. So naturally, it is a weak day for the banking index, certainly. And of course, on the higher end, we aren't seeing as much traction, as much support from the entire FMCG pack, which is buzzing in trade positively towards, but perhaps that's the only pocket of green in the markets at the moment. Well, that's as far as your index is concerned. Let's take a look at the Bank Nifty as well, see how things are faring there as well. So the Bank Nifty is down by around 1.3%, perhaps on expected lines, considering the kind of weakness that we're seeing on account of HDFC, ICICI and Axis Bank. And well, there are no gainers except for marginal gains for marginal advances for Kotak Mahindra Bank. But today is a day where we see a lot of profit booking in your broader markets. So let's pull up the mid-cap index and the small-cap index. The mid-cap index is down by 1.8% now. And a lot of that is very, very evident in your broader markets. The small cap index is also down around 1.8%. And, let's take a look at some of your key broader market movers there. So you do have something like, we'll pull up a handful of losers at the moment. And because of the fact that essentially your broader market movers are looking at substantial change. Something like a Prestige Estates is down around 5.3%. We have a lot of weakness in something like an Aurobindo Pharma, and of course, remember that a lot of these pharma names, especially some of your relatively smaller ones, have quietly advanced, but now they're all coming off by quite an extent. Lupin is down by around 5% as well. And we have weakness in something like a GMR Airports as well. That's down around 5%. In fact, there is hardly a green coming through as far as your losers are concerned. These are the other mid-cap 50 losers. So Yes Bank down 5%, Vodafone Idea, SAIL, all of them are under pressure. We have Paytm, which is down, locked in another circuit of around 5% as well. Concord, AB Capital, do we have any green at all? So with the exception of something like a Jubilant Foodworks, that's up around 4.6%. We have some gains in something like a Nykaa, that's up around 2.8%. And again, some surprising here names as well. Supreme Industries was also up around 1.5%. But the momentum is clearly towards the decline, and that is something which is perhaps weighing down on the indices. I'm going to shift focus to, the FMCG space. And I want to talk about a handful of these names because that's where we are, in fact, continuing to see positive traction. Marico, of course, is one of those counters which is advancing by around 9.5% right now. We are looking at a sharp advance. The numbers are not spectacular, but I reckon that it is going to be more about the commentary. And speaking of the commentary, we've spoken to the management of the company, and we spoke about a lot of things. But let's get in the MD and CEO of the company and see what he has to say. Listen in.
Last year, if you look at the domestic business, I think there were two factors. As you know, that there was stress in the rural part of the system, and therefore the growth was subdued there. Although we had seen some green shoots towards the end of Q4, there was also a factor where we had taken a significant price drops in our core portfolio, and also there was some shrinkflation as far as the value-added hair oil was concerned. Now, this year, I think three things are changing. First, we expect volume growth to improve. In Parachute, we see a slight copra inflation, and we have already taken a 6% price hike in Parachute. The pricing in Saffola and the rest of the portfolio will be stable, and also we are focusing on premiumization in a bigger way. We expect that as a consequence, that if the double-digit revenue growth is something which we are looking at, and aspiring to. And there would be obviously volume improvement versus last year, but there will be some one that will come through both pricing and mix.
So, Mr. Gupta, I want to understand from you now going forward, do we see our margin sustaining at this 19% level, or we see some signs of improvement? Because if we look at our overall food portfolio and even the digital portfolio, we're expecting some kind of a strong growth outlook here, even double-digit margins by FY27. So what is the medium-term outlook looking for over here?
If you look at this year, last year, we peaked our margin at around 21%. And as you know, that obviously there were some tailwinds as far as input costs were concerned, in addition to the cost improvement initiatives which we took. Because of our diversification, we continue to invest behind the portfolio growth, and therefore the A&P will be at a 10% level. Given that there is slight inflation, I think this in FY25, we don't see margin expansion, but if there is double-digit revenue growth, as long as the bottom line grows in tandem with that, we should be happy. Having said that, over the next 3 years, a combination of different things, whether it's an international business mix, your premiumization, and a significant improvement of the entire digital business and foods profitability, obviously the margin will continue to expand. Having said that, I think this year, as I said, because of slight inflationary pressures, I don't